The moving averages are my lifeline. This is how I gauge momentum in the market. And if the moving averages are prices above the moving averages are trending upwards. Typically speaking, you'll see me buying into support as price retreats into those moving averages and horizontal support around those levels. And then I'm looking to play that momentum. So I'm basically buying a dip in an uptrend, right? If the moving averages, let's just go show you why I use it. I'll just try to make this very crystal clear. I'm actually going to remove all these drawings. Just move everything. Get rid of this. Get rid of everything but the 111. And that was the 120. I moved to the 111 from the 120 because the Pi cycle indicator uses the 111. And I like to use indicators that are self-fulfilling prophecies. And so a lot of people are going to be watching the Pi cycle, which is the 111-day moving average. A lot of people are going to use that moving average. So I'm going to pivot from the 120, which is what I've always thought was real accurate, to the 111 because just more eyes are on it. Now I use it differently than other people. So that's my kind of edge, right? How I use it's different than other people. People try to directly trade around it. They try to buy daily closes above it or sell daily closes below. I don't do any of that stuff, right? I just use it as a momentum indicator. So if you see here on the chart, though, when Bitcoin is trading above the 111, when it retreats into the 111, that's very good buying opportunities. And when it detaches really a long period of time away from the 111 like this, these were very large periods of detachment. It's a good place to take some profit. So if you took profit on the way up here, on the way here, and you bought back in to the 111, you would have been able to take some profit, buy back in. And like this one here, you'd taken profit as it gets well detached from it up here. And then you would have tried to buy back in here. And what happens with the 111 is it's a pretty good level. A lot of times if you lose it, you'll bounce right back up into it. And you'll find it again as resistance. And that gives you your opportunity to go ahead and exit. And this is why, again, I really prefer trading spot. But this gives you the ability to kind of ride things out. But happened over here again pretty well, right? This is where I did the best. I exited the market pretty much entirely on this loss of the 111. It was the 120 back then. It was a little bit higher. So the 120 moving average is somewhere over here, right around the same level, I guess. That's where I exited spot largely, right? Except for my bags I just won't pretty much ever sell. But I bought back in before we hit the 111 because the same kind of principle applies. When you get too far detached to the downside from the 111, you can generally find a good pattern that lets you know you're going to bounce back up into it. And my play is always to try to play the bounce into it and then to watch what happens. In this case, we bounced into it, turned over, and then resumed back up. So I, trimmed a little bit coming into it. When we started to resume back up, I got back in. Obviously, a great opportunity to buy into it there. And then you wouldn't have caught the tippy top. The 50 would have helped you, catch the top a little bit better. But to catch the top, there's a lot of other things that can help you catch these tippy tops, like derivatives data and percentage detachment from these moving averages and things like that. So, like this one, it was pretty obvious when we were going to roll over here because Litecoin popped big time. And you just know Bitcoin's going to roll over when Litecoin pops like that. So other little indicators, but the 111 was a good place to. Now the problem with this 111 hit, I'll tell you, this is why I did not do nearly as good in this whole market cycle as I did this one. I didn't take the opportunity to exit. Let me put this on this brush right here at the loss of the 50, like I told everybody I was going to, and I was supposed to, because I was on vacation and I was like, I thought I had a couple more days of watching it trade up into the 50 before it rolled over, and it just rolled over a lot faster than I thought it was going to. So I thought at the time I was thinking this is a Wyckoff distribution pattern. I thought the third would be a lower high and then a rollover. So I thought this price was actually going to do this, right? So I was waiting for that peak above the 50, not getting close to it. And so I didn't take that opportunity to sell spot like I was supposed to. And then my next thing was to sell on a close and bounce back up to the 111. Well, we never got that. So this is why I wasn't able to do as good in this last round of the market cycle, is this sell-off right here blasted right through the 111 without giving me a chance to resell until way, way, way over here, which at that point, we'd already become so detached from the 111 for so long. I was waiting for a bounce back to 200, which I did get very neutral right into that level. That's how I use the moving averages, right? So when the moving averages are trending downward, it's a downtrend, and I just stay out. I didn't do as good of a job because just because of the nature of I didn't take profit like I should have here. And then when it sold off so hard below it, I didn't get the bounce back off the 200 back into the 111, especially this confluence of 111 and 50. I thought we were going to make it up there. So I didn't do a good job of taking enough profits there. I did take some profits as we made this little false breakout and rollover, right? I did book some profits right there, but not nearly enough. And then when we finally made our way back to 200, I did a really large account reset. But I still only took a percentage off. I didn't take as much off as I should have on that bounce back into the 200. But then we rolled over a lot harder again. So this second half of the sell-off I've not been as sharp. That's for sure. But that's how I use the moving averages. And so now that we're below this, see, when I tried to buy that 37,000 support, I was super on edge because we were already below the moving averages. So it gave me the hint that I didn't like the price action. So what I did is I bought, I don't know if y'all recall, but basically I was vocal buying 38, 37, something like that, 1,000 right through here, right as we came into the support area into that trend line. And when it bounced and started to roll right into resistance, I just did not feel good about that bounce and the headwinds of the Fed meeting. That was the Fed meeting that day. And it was because Powell took the 0.75 rate hike off the table, and the market bounced on that day. But I didn't like that. Like, okay, just because he took 0.75 off the table, it was actually a really hawkish meeting, so I went ahead and got pretty neutral again there. But the reason I kind of also was not really feeling great about that is we didn't quite make it back to the moving averages again, and I didn't want the same situation over here. So I did what I had to and sold 39-ish thousand, and then it just nuked after that. So you guys were watching it. I was watching. We're all watching it just nuke. So since we've broken my invalidation, my absolute invalidation level was 34,000. We took out that swing low. I was just done. I'm done for the summer. It's over. It's cooked. I'm just gonna go